check, check. Quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Hey, Coach Jay, I hear you loud and clear on Crypto Meltdown Monday.
Crypto
Wow.
meltdown Monday. What happened to the crypto markets? It sounds like a whale sold 24,000 Bitcoin, maybe to buy Ethereum, driving down the price of Ethereum as well. But we will talk about that all
Yeah.
um, minute. But welcome to At the Buzzer, our market recap. Happy Monday to everyone. If this is your first time joining this session, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. Umberto says, "Yeah, mad loud." Uh, we wanted to make sure that if you were taking a nap towards the end of Top Step TV, that we're waking you up. But my name is Coach Jay. Been a Top Step performance coach since June of 2023. That is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some of my experience and knowledge and hopefully help you become a better trader.
So thank you for that, Coach Paul. You are our chat, our audience. Thank you all for joining. As always, we got Bruno in the chat. Bruno, our moderator. If you have any questions, feel free to send those over. Bruno's going to send them over to us. Bruno, thanks for joining us. And shout out to Andrew. We said thanks and goodbye to Andrew for now, as his last day as a moderator was last week. We got Bruno now.
Welcome,
So
Bruno.
welcome, Bruno. Uh, Thin Air says this is not a meltdown in crypto. It's just a normal move. Yeah, maybe we exaggerated a little bit, but 10% move. There's opportunity in it. Let's talk about the news really quick, Coach Paul. As far as planned headlines go, we didn't really have too much. We had Trump signing some executive orders, Chicago National Activity Index. I don't know what that is, but it was a small number. Came in at negative 0.19. Forecast was negative 0.11. We had new home sales come in at 0.652 million. Forecast was 0.63 million. We got Dallas Fed Manufacturing Business Index came in at negative 1.08, 1.80. Forecast was negative 1.7. Uh, Not really much as far as planned numbers go, but we know that later in the week there is some things coming up. We got durable goods, consumer confidence tomorrow. Of course, we have Nvidia earnings on Wednesday. Make sure you join us for those. Jobless claims and some other things later on in the week. But anything you got on the news, Coach Paul?
Nothing big on the news. I think the Jackson Hole speech by um, Chairman Powell was really rethought because he never said I'm going to cut rates.
Right.
Um, so I think that news, I think after the big spike, um, didn't have any follow through news to push it higher, and we just kind of fell apart in the equities.
Well, back a little bit into the range. We do have Fed Logan speaking right now. Some comments coming out of there. But let's take a look at the markets. We have 36 markets we could trade with top step accounts. And today, to the downside, we have Platinum down 1.89%, Micro Bitcoin futures down 5.36%, and Micro Ethereum futures, our biggest percentage mover, to the downside at 8.93%. To the upside, we had wheat futures up 0.47%, crude oil up 1.68%. Crude is like sneakily one of the best trading markets over the past couple of days. I know we talked about the swing trade potential of it a little while ago. Of course, we do have the day trade here, but even some really good day trades. We'll talk about
Yeah.
one that the house account took earlier. And heating oil, our biggest percentage mover to the upside at 1.81%. To talk about our big four, we had crude oil up 1.68, the S&P down 0.37%, gold down a quarter of a percent, and the Nasdaq down a quarter of a percent as well. Let's take a look at the Nasdaq chart, Coach Paul. I am here on a daily. What are we seeing on the daily in the Nasdaq?
Little correction, back to the 20-day moving average. I don't think we settled at it. Um, After Friday's huge move, we're just resting. I don't see that as a turnaround, but that could happen. Um, but really the only thing I see there is we didn't have follow through buying, but still bullish.
Yeah,
How
still
about
pretty bullish. Give me 1 second. I'm just adjusting charts over here. But yeah, it still looks pretty bullish. A little bit of a pullback into Friday's range. We know we had that huge spike on Friday, but we are pretty much closing right at the 20 moving average, which is at 23,527. Last trade in the Nasdaq right now, 23,512. We'll go down to a smaller time frame, take a look at the half an hour chart. And let me adjust these charts really quick things around here. All right, there we go. On the half hour, what I saw, Coach Paul, we talked about this with Hogue, and we do this all the time, right? Framing out the news candle, whatever high volume event there is. Last week, we know it was Powell's speech on Friday. We had that huge, 350-point candle in the 30-minute period. Uh, Something about these 50% areas, Coach Paul. I don't know why the market
uh,
continues to do it, but it does. Um, a perfect test of it, and we rally. So overnight, had a decent short. Started really during the London session. Came down, tagged 50% of this. Some might call this a fair value gap. Some might call it a call it single prints. I just call it 50% of this high volume range, and that's where we tagged. Right, we didn't close back down to uh, you know 23 340s, but we tagged that 50%. There was a ton of volume that traded there. Let me see if we can
yeah,
pull that up on the DOM. But at 23 450, Dakota was calling it out this morning during fast markets. There was a 900 lot sitting there, and right at 23 450, about 768 contracts traded. I actually think it was a little bit more than that, but a ton of volume traded there. And as soon as that bid was filled, we bounced in the New York session. So nice area to look at. Of course, we still do need the market response. It's not just a blind buy at that area because the market could continue to sell there. But when you see a big buyer like that step in, Coach Paul, it's kind of hard to fade them.
well, they bought at a good place, did they not?
Man, somebody was looking there. The price meant something to
But
someone.
even like you said, strategically, you named about 3 or 4 places of interest for different trading programs. Bottom line, and a review, if you like that area or you didn't, you thought I was going to follow through, you can be wrong down there, and but when we talk about this, you're fading some size, and then you're fading some structure. If
Yep.
you do that and allow yourself to be wrong, um, that's where risk management comes from. On the other side of the coin, if you bought that, um, nice trade. But look at the size of the buying on that bar. That was the biggest volume of the day. Understanding volume is going to help you execute a plan. If you're not following volume, which I didn't for until I started working with Coach Jay, it's really going to help you identify opportunity.
Absolutely agree. This green box thing that you guys see on my charts, if you're a newer viewer here, it's just a fib tool. Look at the fib retracement tool. It's just a fib with 0, 50, and 100. And I just made the middle line green. So it shows up that way. You could use a rectangle tool, but really all I'm anchoring to is high volume. Let's take a look at the opening range. And a different story today in the S&P than in the Nasdaq. The Nasdaq got going out of this opening range a lot earlier than the S&P did. The S&P looked like it didn't want to move today at all, but chopped around for a while here before we got any continuation. Just didn't really look convincing from buyers. Not really surprised to see us come back right back to that opening range, Coach Paul.
Yes, I have to laugh. Yair Curio. What is a fib? Fig Newton? No. Well, so I had to laugh at that. We'll go over that after this. But looking at that opening range on the first bar there, that was selling at that. Was that a 50 percent fib from that big candle?
Yeah, right, pretty much right here, that
Okay,
450 area that we were looking at before. There's that candle again. It was the 30-minute candle we were looking at, and there it goes. And then if you look at that 3-minute opening range,
right there.
we're- yeah, we tagged it, and that was pretty much it for the day. That's where that big buyer stepped up. Again, uh, could this have been a level where the market just sold through? It could have, but 900 lots coming in and saying, "Hey, we're not going any lower than this unless you are willing to sell 900 plus," uh, really took all of the selling pressure away from the market at that point, and a really nice bounce from there.
Yeah. So understanding that 50% was huge. What I That was a tough trade though. There was a big range on that open.
Yeah, there
Um,
was.
and there was a bit of chop.
Mhm. Yeah,
Um,
the first half an hour we chopped around for a little while.
so it, we can, some people, this is hindsight trading. We're reviewing, but understanding that chop in there, you can lose money, but you have to lose it well. I bought it early, lost a little bit. Bought it again, made a little bit. I think I literally scratched the whole day. But in that review, even though that looks easy, it took what? How long before it broke out of that range?
It took half an hour before we even left the range. It took a half an hour before we closed a 3-minute candle outside of that range. Now, some people might tell you, don't trade the first half an hour, don't trade the first hour. Some days we're going to see it leave the range in the first 3 minutes, right? So I think it's all subjective, right? And it depends on what the market's willing to present. But today it was just not willing to present a breakout, um, at least in the first half an hour, right? We had some false breakouts. It's part of the reason why on these opening range trades, I like to wait for that candle close outside, similar to how we wait for a candle close, Coach Paul, on that J trade, right?
Yeah.
Where you could have gotten short here on a price basis, but we never closed outside, and volume definitely was not following that move to the downside. Um, so waiting for that close just adds a little bit more confirmation. Do you have to be a little bit more patient? Yes, but patience is not always such a bad thing.
Yeah, patience is a virtue.
Yes, it is.
But I don't have the time. I got to trade. I got to trade. I got to trade.
Get me in the trade. Get me in.
Uh, Get me in. And we're talking about that and patience in all seriousness. Being patient and acquiring that ability to execute your trading plan and actually take good losses early. I mean, that's where you gain a skill. That skill we talk about it a lot, but patience. I mean, if it's not there, as a young trader, first reaction is, well, it's got to go the other way.
Yep.
If you've ever been caught in that, this is when we're talking about impatient and in being patient. Um, you, it was hard, like we said before. There was chop, and then when it looked like it was going to be a range, it
Yep.
took off.
It took off. We got a question here from Balaji. Which of the candles will qualify for a close above the 3-minute opening range break? Technically, this 8:57 Central Time candle closed above. I'm gonna be honest. I probably wouldn't have taken this one because it closed so close. I probably would have taken the next one. Right. I probably would have taken this one here
Yeah,
because that close is not very. It looked, yeah, sure. In hindsight, it worked, right? It closed above and it went. That's not enough for me. That's not
yeah.
enough for me.
Pie with a great comment. We want to make 100-point trade every day.
Why
Yeah,
stop at 100?
yeah.
I want
Why start? And
I want 200 points every day in 5 minutes too. Don't make me wait. Fortunately, that's not how the markets work.
So,
We got another question from Gabe here. Gabe Garcia asks, "What are you looking for on the Dom when looking to long or short?" So, Gabe, what I'm looking for, and you'll hear it sometimes. It gets called out on Topstep TV. Hey, there's a 900 lot sitting at XYZ price. Those orders are information, but a lot of times what you'll see is the orders get pulled, right? And then people get frustrated and they're like, "Oh, reading the Dom is stupid. It's spoofing." And yeah, it can be frustrating if you see those orders get moved around a lot. But for me, what I'm looking for is when one of those orders gets filled, what's the market's response? What's the immediate response to that order getting filled, right? So the 900 lot that got filled on the downside, it was at 23,450s. It actually wasn't on this test here. It was on the second time, right? So the second time we got down here, 23,450, there was a 900 lot filled. Uh, what I'm looking for is immediately after that, what is the market's response? Is there any follow through selling, or did we? Does the market go the other way, right? Because what this candle shows is that we closed lower than we opened this candle, right? So it's a red candle, but there are buyers in here, right? So what I want to read is what's the market's response from the time that that volume prints. If it's follow through, then I want to go with it. If it's stopping volume where it stopped the market here and we go the other way, then I want to go with that, right? Because there are definitely buyers that stepped in that higher time frame area, and again, that was a level that we were looking at on a higher time frame from Friday. That was a level of interest. So really, it's reading the follow through to the orders on the Dom.
it's interesting. That 900 lot
Hmm.
was in that area you said on the lows.
Yep.
Was it after the opening, right? So those lows, and
Mhm.
now maybe this is a nice little tool or trick. When you see something like that, is that is that going to hold, right?
Yep.
Well, you could frame that candle out like you did, and then let's see if it breaks out of there, and it did. That's you know that's a nice little tool
Yeah.
because if it took some action to fill that up, right? We had a mini J trade there, even though it wasn't on the lows, but those sellers got absorbed by one big order. If you're playing poker, you know what I mean. It's like, okay, now what? You one of the someone bluffed, right?
Right.
And now it's it's they're raising the ante. Can you stay in, or are you going to be forced out? In this situation, when you see that kind of, there was a big dog that absorbed it, and the rest of the little dogs had nowhere to turn. That's a great example.
Yeah.
Nice
Really
job
is.
on that.
Really is. I got a question in the chat. What are you looking for when you look at volume? We kind of break it down here every day, but I just put a link to a video in the chat. It's a 2 hour class. I would suggest watching that. We try to break down all of the aspects of it. And if you watch that and you have any questions, let us know. But it's all in that video for sure. Just quick look at the S&P. Different story today, where the S&P chopped around a lot longer in that opening range. We look at the first 3 minutes. It was 2 hours. Or yeah, I mean we closed outside of that range in an hour or in a half an hour, but the S&P just took forever. And it's just the case of trading different markets sometimes. And I think someone was on air trading today. They were trading the Nasdaq, and the S&P looked like it was going to break out, and you're like, oh yeah, the S&P is going, so I'm going to trade this. You still do have to trade the market that you trade every day, right? Are they going to move in tandem? Sometimes they are, but they are still technically different markets, different components, right? The Nasdaq 100, the S&P 500, they are going to move separately, and I think today was a perfect example of that, where if you were trading the S&P in and looking at a correlation between the Nasdaq, might have been frustrated with this chop. Eventually, we left the range, but a lot of chop to start.
You know, it's interesting. On the half hour on the S&P. from last night's opening, and we had if you attach the session VWAP, it never recovered. Look where it went to.
Yeah. Yeah, right back to that opening range. That first 30 minutes. This bar up here, for any of our new viewers, is the first 30 minutes when the market opens up. So this is Sunday night's open. What we're looking for is this red line, which is VWAP, how it responds, and then how price responds to that range. If we get back up there, we can see the red line left the range, and even during the New York session, when we came back up and tested these prices, volume's all the way down here. So I know I was on with Jack and was it Alfie at the time, and we were looking for a short up here, and it ended up playing out. Right, settlement in the S&P was right at a 64.83 quarter. The high of this move is 64.8275. But like you said, Coach Paul, we came back up to a price, and VWAP was ticking lower.
And look at the volume. It was just small volume
Yeah,
when it was up
almost.
on those
Yeah, wow,
highs
that's crazy.
on the regular trading. So it lost fuel. It was a nice little scalp on that failure.
Yeah, really nice trade there. Shout out to Mo and Dolby who caught the end of the move toward on Power Hour. Caught the end of this sell off. So my question, Coach Paul, is we had this Powell reaction. We're trading back into 50% of it in both the Nasdaq and the S&P. Uh, I'd be looking at this 6450 area in the S&P and 23,450 in the Nasdaq for the market's response, right? Do buyers continue to hold that as a support, or do we trade through it and fill the rest of this imbalance down to the other extreme of that candle? Uh, we said we were going to have the Powell bar until we had the Nvidia candle, right? So, uh,
We'll
not
pass
surprised to
it
see the
to
entire
them.
daily range here.
Yeah, we're still inside in that, and I think we will continue to stay inside until what are we going to call NVIDIA Day?
Video day
Um,
Wednesday, which is after the close on Wednesday too. So I would not be surprised to see these markets in this range until then. Could we get some profit taking maybe before Nvidia or something like that? Yeah, but I'd be looking at this range for sure for us to stay here. Anything else you got on the equities, Coach Paul?
um, what did our friend Rusty do? Same thing.
Same thing. Pull back a little into this range.
I mean, I look at that as that isn't bearish.
No, no. So there, yeah, that looks pretty healthy right now. We didn't get down to 50% of the range on the daily. We are still holding that high. Uh, yeah, this doesn't look bad. Pullback day today, but those are to be expected. Are to be expected.
All right,
Uh,
that's Dow. We can't forget Dow,
Very
the
similar as
cousin of
well.
Rusty.
Very similar. Back down to under 50% of that candle. Does it rotate all the way to the other extreme? Uh, Technically, I would say yes. We got that 200 moving down average down there as well on the 30-minute, but we will see what the markets present. Um, CFA, good day today. I passed another combine. I'm up two XFAs now. Good stuff, CFA.
Good
Trade
on
well in
you.
those XFAs. Protect those accounts. Pull some money out of the markets. Um, Anything else you got on the equities, Coach Paul?
That's it.
Take a look at gold on a daily. Seemed like a lot was going on in gold, but you zoom out and we're at the same damn prices we've been trading for half the year.
It's trading a lot and not going anywhere, but some great opportunities we've been having in gold day to day. I really didn't watch it today. There was so much else going on. Um, yeah, what's to say that we haven't already said? We'll just put this on repeat like a broken record. We're caught in a range, find the opportunity in the middle, um, with very small volume. Wow.
On the daily, yeah, on the daily, we were almost half of a daily average, a little more than half the daily average in gold, and that's been the case for a little while now. We've had a bunch of days just under that daily average. I don't know what they're doing to this market. Just don't kill the opportunity, please, gold traders, if you're listening. This has been one of the best markets to trade for the past 2 years. Please do not ruin it. Please do not ruin it. But looking at gold, pretty consolidated data today, Coach Paul. Not a whole lot to talk about. Range traders, if this is some pretty good opportunity for range traders here. We have that VWAP that barely left that 30-minute opening range from last night, and just a really tight range. We have the Powell candle here as well.
Yep.
This looks like I get chopped up today, but I know range traders probably love this price action because you can identify where those extremes are, and as long as there's no momentum push outside of it, you know, fairly safely manage your risk.
Even so, it's the small range. What was the range? It was a range for ants. Is that what?
Yeah, on the daily, that was a 15 $16 range, and we've seen this
Wow.
right every time gold gets in the middle here of this consolidation. We see these ranges contract, right? So if you are trading gold right now and it's trading near that 3,400 price, could we see some momentum push in either direction? We could, but just look at historically what happens, especially over the past 3 months, at what happens when we get price in this area. Ranges contract a lot. So, and then when we push away from it, right, that's when we have this extension down here. Friday we have a $60 range day. 2 days before that we had $44. So I think the opportunity in gold is pushing away from this range or maybe trading back into it. But once we get in here, you got to adjust expectations, especially if the market's not breaking out, because every day near these moving averages on the daily have been pretty tight ranges.
Yeah. Hard to. No, I guess it's hard to make money in a small range like that,
Yeah.
whether you're trading range or considering the risk you need to take.
Yep.
So, um, probably going to rally now.
I
It's a
mean,
50, it's a 50% chance.
I would say it's a 51.49% chance of rallying just because of where we are and where we came from. If this pattern breaks, then I'm wrong. But the pattern has been the pattern for 126 days. Right? We come down here, we find buyers, they push it back up, find these equal highs up here, they push it back down. Uh, and again, that pattern will continue to be the pattern until someone wants to move this market in a direction. And right now, they're comfortable trading the range.
The pattern will continue until morale is improved.
Exactly it. Exactly it. All right. Speaking of a pattern that might be changing a little bit, let's see what Richard is talking about over here. We came down to 64.57. I typically have a short trigger. Keep that in mind for tomorrow, Richard. Markets open up in about an hour and 15 minutes. Uh, Crude oil. Let's take a look at crude. Patterns changing a little bit, Coach here, Coach Paul.
Oh, is it?
What's going on
Yeah,
here?
well, it's interesting. You have with the 200 moving average we closed over on the daily. Now we have a similar Powell candle. We'll call it the OPEC candle.
Hmm.
Let's see if we get 50% of that. But we're gaining momentum to the upside.
Are you talking about this daily candle,
Yeah,
Coach
that
Paul? Oh yeah, this one,
$7 range.
monster candle.
We've already tested it once. 50%. Imagine that. Um, but now we're over the 20, the 50. We're clearing the moving averages. And we closed near the highs of the day. As we talked before, this is a classic rounding or cup and handle, rounding bottom. Can it ignite? I mean, Is OPEC gonna make another announcement to drive it down $7? I don't know, but I just like this action.
Yep.
Um, let's get a trend line from that OPEC high. Oh, lordy lord.
Also, fundamentally, there's been some news that have been bearish for crude prices, right? OPEC being one of them, with supply increases. Then JD shared some stuff this morning, just about minor escalations in the Middle East, and we know that crude is a headline-driven market. Um, from a technical perspective, it looks like it can break out, but fundamentally, if we start to hear some headlines, this market, it feels like it could go real quick.
Uh, yeah. Um, Blue Blue Boy D, hook or consolidating wedge breakout. Yes. So consolidating wedge breakout, a wedge would be we draw a line along all those supports. Yeah. And you settle above this and like you just said, coach. Well, and on top of that, we had what record shorts?
Yes, record short position by
Okay.
institutions in crude oil right now.
So the old saying goes, he who sells what isn't his'n buys it back or goes to prison. So what does that mean? If we can get any more momentum, who's going to cover? Who's going to be there for to cover? This market is record short. Very
Yeah,
interesting.
yeah, interesting
Very interesting.
play here. Which record short also means that there might be incentive for crude oil to push prices lower, right? We might see some news fundamentally that comes and continues to push this position lower. From a technical perspective, it looks like it's building a little bit of momentum. I would like to see a little bit more volume to the upside on some of these moves, but that also means that, some of that volume, if we see a spike in volume to the upside, it's going to be because of short covering, right? Where we may not have many initiative, but they've had an opportunity. If you're a longer term, maybe you're swing trading this, you've had some opportunity to buy in this consolidation. Those are probably not going to be the buyers that want to just continue to buy and push the price higher, right? If I'm accumulating a position for a bigger swing, I want to do as much as possible at lower pricing. But once we start to push above areas where shorts might have to get out, we would see that volume pick up to the upside, maybe for some short covering. But we will see there. I think I got to check with Hogue on open interest to see how that is moving tomorrow morning.
Yeah, good point there. But that's definitely on the playing on the list. Keep an eye,
Yeah.
like you said, it's trading well. Let's look how it started last night.
Also, what I do want to, remind myself of is that we are talking about crude oil. So, as bullish as this looks, it is crude oil. What are we seeing last night, Coach Paul?
A range that couldn't we couldn't break out of. Let's start it at Shanghai.
Here is the Asia session open. So, really not a lot going on there. We could check euro.
What, what on that Shanghai
It,
open? Let's frame that out. Yeah,
so it's the one after. So this is 9:30. This is, sorry, 8:30 Central. This is 8 o'clock Central right here.
8 o'clock. No, we still couldn't break out of volume wise out of that range.
No, we couldn't.
No, let's go to the next 8 hour. Stop, merry old London.
That's when that volume starts to pick up a little bit. We can see volume start to leave the range as London comes in, and then just a really nice rally from there.
And in New York too.
Yes, so let's take a look at that trade. The house account took an opening range trade today, 5 minute opening range. And again, a lot of people I think are looking away from crude right now because it's in a range. This market doesn't move anywhere. We saw crude up 1.68% today, and from this opening range breakout, we had a 1.5% move to the upside. So, 1.5% in this tight range. It's still about $1 in crude oil. Ton of opportunity here, and very simple trade. Look at the 5 minute opening range. The chat votes on 5 minutes every day. We broke above the high, risk goes below the low, and there was no reason to overmanage that trade. We we ended up, I think, taking two off somewhere pretty close to the $65 level and took the rest off at 64.80. But a very mechanical approach to this trade, Coach Paul.
Yeah,
Buying above the high of 5 minute opening range, selling below the low. You get a 2 to 1 pretty quick. And I know JD and Hogue like to manage that position from there. But don't gotta overthink this one.
you catch it,
Yeah.
and you just manage it. Now, I, this isn't all magic and easy. It's far from that, right? But it's about discipline. Let's say you saw this chart differently,
Yes, because you may have.
and you may have. I mean, I didn't.
I
Where
didn't
do
see a
you
buy.
take?
I'm gonna be honest.
Yeah, I've been. I have been licking my chops.
Okay.
But let's say you get caught. You wait for the New York Open and you sell it. Now, to become a good trader is to recognize before you got in, you predefine your risk.
Right.
Without that, what are you susceptible to?
Unmanaged risk. The market. You're susceptible to the market, whatever the market wants to do.
So, yeah, if you, I just don't. I want to make certain that we're not um, making it seem so easy,
It really
right?
isn't.
It is not. Undefined losses will destroy an account faster than you can actually enter the order. It's so recognizing what am I okay, okay, I want to sell this. Now the volume, look at the first of all, you start looking at the volumes. Every one of them, every big volume was buying.
Yep. And more than the other one.
Yeah. There was literally look at that. Look at the selling size today. It didn't come to the close. So just reading the market, allowing yourself to take good losses. Um, if I mean, any time today it was hard to keep a short. If you're fighting it, you're just trying to be right. I know this. I've done it.
Same here.
So recognize it. Using, volume, flow, moving averages, whatever. Just allow yourself the grace of being wrong early and small.
Great
That's
point,
all I've
Coach Paul.
got.
Great point. Blue Boy says I've been guilty of that. I'm still guilty of it sometimes. There are still sometimes I'll take a trade. I'm just like I want to be right about this, and the market reminds me that regardless of what I want, it's going to move the way it wants to move. So I could either get in the flow with it or take the losses. It still happens to this day, and I think the quicker we accept every day, right? It's not just a one-time thing. Oh yeah, I'm just gonna, accept losses every day. It's a conscious decision that you have to make every single day, whether that's you're using the risk tools, or you're saying, hey, you know what, I'm giving myself three trades, and whatever rules you have, because if you don't have them, uh, yeah, it's hard to because we talk about the same setups every single day, Coach Paul, but there are days where I don't execute them well, and I actually there are some days where I execute exactly the opposite of what the setups are saying, and ideally we don't do that, right? But sometimes it's going to happen. Sometimes you make a bad read, but measuring how much that bad read is going to cost you is extremely important before you put the read on, because I'm curious how many traders realize that they made the wrong read when they make it. That's a it's a weird spot to be in, right? Because you want to assume that when you're clicking the button, you're doing so with a game plan and in your best interest, but you don't. Sometimes you don't know until the trade plays out, right? So managing how much that downside is extremely important. Blue Boy says that is a skill. Yeah, it really is. It really is. The market reminds me of my wife, Bruno. Uh, that's a good one.
Thank you, bro.
Never right where you want to be.
Oh, man.
Um, that's
But
hilarious.
that's hilarious. But going back to that point, that's why journaling and review your trades, because I know I went through this, like I say before, there's trades like, who, what the, uh, you can either ignore it or you can learn from it. We're either winning or learning, as a great basketball coach told me once. And so learn. Like, it's easy to get caught up, but then when you start seeing it, then you can start realizing that, yeah, I, I need to be a better loser. I'm going to put that to Tom Hugar in Best Loser Wins. But when you learn that and you get that skill, you're not attached to losing trades. It's an important function. Practice it and you get better.
Absolutely. I want to comment on something that Mr. Dev, what's up, Mr. Dev? People use the words crash and rally too often without a clear definition. What do you mean when you say there's a 51% chance of a rally from here? We were talking about gold, and notice I didn't say there's a 90% probability of a rally from here. Uh, I said 51.49 because gold can do whatever the hell it wants here. But the reason I would lean to the long side from where we are at in gold right now is because of this pattern that we've had, right? We traded below the 200 or the 20 and the 50 moving average and rallied from there. Then we traded above the 200, the 20 and the 50 moving average and sold off. Then we rallied and then we sold off. So I'm just going with what the pattern says. 51.49. What I try to remind myself is if there isn't a 60% probability of a trade, then I'm accepting completely random results at that point. Um, and even then, we are still going to get random results, right? If something's a 60%, 70% probability, every trade has its own outcome. It's either going to win or lose. I would not place a trade on a 51.49 probability of something happening. It's a little bit better than a coin flip. And there's just not a lot to do from that.
It's a great point. I seriously, I'm glad you brought that up. Pete Stottlemyre once told me, he goes, to help in that process is every trade is 50-50.
Yep.
Why? I'm like, and then it took me a little bit to really figure that out. Is like, what? Because it's uncertainty. When you can do that, then you can start leaving the prediction mode and start becoming a probability mode. And it's a big difference. That's what trading is managing risk, looking for opportunities. Nothing's ever certain. The moment you start thinking it's certain, check yourself quickly. But it's allowing we don't know the future. We're just looking for opportunities. That's why finding a trading plan, taking those trades within a plan, and then you can settle your mind down.
Even if it's the 99% probability trade that you worked out, Coach Paul, because I don't hear anyone that has 100%, the outcome is always 50-50. I mean, maybe you want to throw in a little bit there. You go with the roulette wheel where how do you count break even? But every trade is a winner or a loser because you're paying commissions on something, right? So uh, no, no one gets out unscathed. Uh, no one gets out unscathed. So manage risk, manage risk, because if it's 99% probability and in that 1% you bet the farm, uh, somebody's waiting to take your farm.
Grow some corn.
Yep. All right. We talked about the big four, Coach Paul. Any other markets you want to talk about? Anything on your scouting report right now?
Yeah, like euro currency. Interesting. You speak of the Powell candle.
Gave it all back.
Gave it all back. So, and it did it not tenderly. um, Look at that. I mean, this could be a huge J trade to the downside. Um, let's look at the daily. I, all that was nothing Friday. Now we're back to the 20-day moving average. We're under the 50, and that that buying was it appears to be knee jerk buying. Maybe short squeeze. Yeah, I got caught. Um, but let's look at the half hour and see what was a really interesting trade. Have we seen this pattern before, Coach?
What is this? What did this today? We just looked at a market that did. Was that gold or was that the equities? Everything? Was it
They're
everything?
all the, it's all the
Everything did
same
this
to
exact
me.
same move? Yeah. Uh, yeah, but oh no, it was crude oil. It was everything. I don't know. We came, we left the range to the downside with volume. That 30-minute opening range came back, tested it, 50%. Where's volume? It's down here. Nice short opportunity. And again, we don't want to make this seem easy. Right? I'm talking about this now. It's like, oh yeah, just sell it here, buy it here, make $100 million. You know, buy a private island. If it worked like that, Coach Paul and I would not be here. Um, but from a technical perspective, this was a market that had the potential starting the day where anytime I look at one of these big gap candles, Coach Paul, the first thing
Yeah.
I think is what's the potential that we fill that candle?
Yeah. What is I 50-50?
50-50. 50-50. But then when we start doing it and we start to see volume accept inside that range, price accept inside that range, it starts to look like an opportunity to limit risk. Now, did I have a trade in the euro at all today? I didn't. Kind of wish I did, but you don't get paid for wishes. Uh, but this was a just a beautiful trade. How are you looking at
If
this?
wish
Go ahead.
if
Yeah.
wishes if wishes were fishes, we'd have a fish fry every day.
Yeah.
I had to say that.
Yeah.
So looking at that, you know, that VWAP left early. That was like someone said, "What, you're gonna pay what for euro currency?" I've got some. Hold on, I can back up the truck, and they just dumped it. Because that VWAP left long. Now, when that happens, what can we take out of that?
There are more sellers, more aggressive selling than buying in this market.
Yeah.
Sellers are in control. They had all attraction.
Now that happened in Asia. Now this is Sunday night too. So what happens when Europe opened up? Because that's where the biggest volume is going to come out of.
Euro, here is the European Open right here.
Yeah.
Same thing. If we attach volume to that, man, what a trade.
Yeah. Now Europe was even more like, oh, yeah, we got more. But like I said, part of this review is to learn how to read the flow of the market from an objective perspective. Um, and that takes time and it takes um a lot of work. But once you start seeing it and understanding that VWAP is what? Volume weighted average price. Um, and you can catch nice little moves there. I'm taking 2 to 1. I'm done. See ya. I'm gone. Um, now maybe you like to take 3 to 1, but whatever. The key point is the flow. The flow of what? The flow of orders. Is there an imbalance here? Well, yes, there is. What is that imbalance? I mean, look where we went to also, where we started to the tick.
Right to the yeah, right to that low and bounce off of it. And like you said, Coach Paul, this might be an interesting one. I mean, we're seeing, the euro currency closely tracking the dollar price action. We saw a rally in the dollar today. Dollar's pretty much in a range. We looked at a dollar chart. It's almost the inverse, exact inverse of what we're seeing here. If we start to see some price action and some volume trade below this range here, below this candle, uh, what do you target?
Oh, from a longer term perspective,
Yeah,
back to the 200.
been a little while. Been since April since we tested
Yeah.
that.
Now, that would be a target.
Hmm.
Now, that's a long term. Where am I
Yeah,
wrong? Well, if it gets
50% of
back
that
above,
candle.
yeah, well, yeah, well, for a longer term, it'd have to be above that candle from Friday. That's your risk. You know, if this could be a 5-minute chart, but this is a
Right.
daily chart, so you have to take more risk. But that's when I would say, all right,
That idea is wrong.
that idea is wrong. Eh, Oh, I was wrong. Just ask my wife.
The
No, I'm gonna
euro.
get in trouble here.
Yeah, don't. Careful. Euro is down almost a percent today. So again, how many traders do we have in the chat that trade currency futures? A lot of the focus that we have is on the equities, uh, maybe a little bit of gold. Most of our traders are probably trading the equities, but the currency futures. I want to look at this real quick. Oh, why'd you sign me out? Why would you do that? Come on now, let me back in here. Uh,
Goldman interns are cutting
right.
us off.
All right. Let's just take a look real quick at two different charts. I'm gonna pull up the euro currency on the left side. Just gonna look at regular trading hours and the S&P on the right side. Let's do the Nasdaq. Most people trade the Nasdaq. Maybe today wasn't the best example because the Nasdaq was pretty clean on a half an hour. Uh, but there are great markets to trade even during the New York trading hours, right? Where this is the euro on the left side, pretty directional move, one direction the entire day. And there are days where during that New York session where we have this set to regular trading hours, there's a ton of opportunity here. So if you're struggling in the equities, take a look at a different market. We share a bunch of different ones all the time. Is there a guarantee that one of these markets is going to play out really well every single day? There isn't, but neither are the equities. But there are markets that present opportunity. There are micros in the currencies as well, right? You could trade M6E instead of the minis if it's too expensive. But ton of different markets to trade.
Yeah. I got to give Heather a shout out here. This is a great perspective. After listening to you guys, it sort of reminds me of marriage. Nobody planned that big wedding if they think they're going to be wrong. And I think that's how we are in the beginning of trading. Great, great perspective. That's so true. Um, because we have these huge expectations, and whether it's a marriage or it's trading or business, any kind of relationship, you have expectations, but those expectations are overblown because along the way there's going to be bumps, there's going to be problems. It's how you react to them. And it's a great point, because I'm not here to pick on wives, because I had to learn how to be wrong in my marriage too. Just like trading or any relationship, it's accepting, okay, this isn't working. What do I have to change? What And being honest with yourself. So in trading, that's a really good point. We have these huge. We don't do this with the thought of, wow, I gotta learn to be wrong. It goes against your nature.
Yeah, I
So,
gotta know to be how to be right every single time is usually the mindset.
right, how can I be more right? And then there's once again, it goes to Tom Hugar in Best Loser Wins. Learn how to be a better loser, which because we have this attached meaning, loser, you're a loser. Uh, when I'm trading the best, I'm losing the best. And I really mean that. I'm not saying that for color here. It's like you oh, out, out. Oh, there it is.
Yeah,
So
like, oh, that was
great
exactly where I
discussion
was
today.
supposed to be wrong.
Yeah.
Great point there. Great point there,
Yeah.
Coach Paul. Heather,
Give it to
great
Heather.
comments.
Yeah.
Yeah, seriously. Uh, know when you're wrong and accept it. My green screen on low light is hurting my eyes. Yeah, but Bach, I got to figure out what's going on with my camera. Sorry for hurting your eyes. I could go off camera. We're almost done here. We got about 4 minutes left. I got to figure out like the Hulk right now, turning green a little bit. But all right, Coach Paul, we
Oh,
got the euro. Anything else?
oh, how could we go without talking about Bitcoin and ETH?
Yeah, let's pull those both up. To Bitcoin on the top on the sorry on the left
Oh,
side, and go extended trading hours over there. Huge gap down, and Ethereum. Who
Gordon.
said it earlier in the chat? This is just a regular move in crypto, but we know that Bitcoin doesn't normally have gaps, but we are trading the futures here, and a pretty big gap down. The news, Coach Paul, in the Twitterverse was that a Bitcoin whale sold 24,000 Bitcoin at the market to buy Ethereum, sending everything lower. That was the
Okay.
uh, that was the drama on the Twitterverse.
Well, we got filled.
If we go to market,
I mean, I'm
somebody got to buy it.
very so. This is okay. Let's look at volume here. Did the ETH had no gap down?
No, no gap down in ETH. Ton of volume traded towards the end of the day. Uh, Ended on heavy volume, but no gap down.
I'm just curious. I don't know. Maybe our crypto. I'll have to ask my crypto kids. Did, is he going to have to pay that tax? That's a lot of tax. The gas tax in
Oh,
Ethereum.
yeah.
It's it's considerable. But um, look, wow, that gap in Bitcoin versus Ethereum is kind of. I want to keep that chart. Well, so let's look at so Bitcoin opens with a huge gap. What was that? A 4% opening or lower?
We were down at that point from the open, yeah, about 3.5%.
Okay. Now, now you might want to buy it. That gap is it going to get filled? Well, first of all, it's under the 200. And look at the Powell candle failed outside.
Yep.
Hmm.
Bitcoin
Hmm.
starting to trade like the equities.
Are the boy? So anyway, just go finish this. Let's look when we talk about volume. Now,
Right.
and the result of volume is VWAP. It went flat. There was no responsive buying. It's cheap. And look where it stopped on the opening, right at the base of the Powell candle. And it cannot recover. This is very bearish. Wow. Look at that. When it broke out of the range, we came right back to the 50% of, and that's kind of a regular range. And look where we ended up on the lows of the day.
Right.
Let's look at a daily.
Coach Paul, you were not talking literally about taxes, right? You were talking about selling
No,
Bitcoin to buy Ethereum, those taxes, right? Paying that transaction cost of Ethereum, which is technically a tax. Uh,
yeah, they call it the gas tax.
yeah.
It's you for with Ethereum Cash, you pay a percentage for the energy that's used to create it,
Yep.
called a gas tax. Um,
Looking at the daily here in Bitcoin,
yeah. Well, it looks like we want to go test the 200
been a
moving
little
average.
while.
Yeah.
In a little while. Been since April.
You know what? And look at the difference between Bitcoin and Ethereum. So yeah, uh, it's incredible. I
Interesting
guess,
times here. I wouldn't mind a little pull back to this 200 moving average on the daily.
yeah, especially if I was short. But
Great thing about Bitcoin futures, crypto futures, you can trade both sides, right? Even if you don't have exposure to the crypto market for buy and hold, you can trade both sides, and then maybe you take some of the profits that you make and go buy to hodl, buy to hodl. That is not
I
financial advice. Nothing that we say here is only for education and sometimes entertainment purposes only.
so never one, no one got back to the Fig Newton question. Said, yeah, we're past time now. We will answer that tomorrow. It's a good hook to get you coming back. And before you come back, before you leave, hit the like button.
Hit that thumbs up button if you haven't done so already. We appreciate it. Big Newton, Fibs, uh, Yair. We'll cover that tomorrow. I personally don't use Fibs. I just look at high, low, and 50%. But why don't we talk about some stuff that we haven't talked about before?
Yeah,
It's always something to learn. So I'll change my Fib tool back to the default, and we'll see what we
yeah,
can do
we'll
here.
talk about it tomorrow.
You can see all my Fib levels are not the real Fib levels. Everything's like a 25% or whatever, but we will talk about that tomorrow. All right. Coach Paul, anything you got before we go?
Um, Plan your trade and trade your plan. We talked about it a lot today. It really is. There's a lot of good opportunity to be coming here in the next couple months. I feel. Be ready. Um, Preserve your capital because I think you're going to be. We're going to see some big opportunities in these markets. So enjoy, rest up, and we'll see you tomorrow.
See you all tomorrow. Trade well, manage your risk. I'm going to be on Slow Markets with Coach Dakota tonight. But before that, we got Coach Hoop doing a class in Discord in about 13 minutes. Then Coach Ray and Coach Vince at 6 p.m. and 7 p.m. Central Time in Discord as well. Uh, Coach Dakota with Slow Markets at 7:30. Aaron with the London Open, 1:30 a.m. Central Time. D with the Euro Trade at 3:30 a.m. Central Time. And then we're back for the opening call tomorrow at 8:20 Eastern, 7:20 Central Time. Uh, Wednesday, we are going to be having an NVIDIA watch party, so make sure you join us for that. We will watch the fireworks with some popcorn. We can't trade, but we know that it's going to move the financial market, so we'll be watching. We might have some special guests watching with us as well, so tune in there. It's not Jensen. Have a great night, everybody, and we'll talk to you all tomorrow. Bye.
All right. Bye.